Hi traders, it's Roberto, and today's Wednesday, September the 3rd, 2014, and we had some news event out of Canada, and I received several emails this morning. Members are still confused how to trade a news event, so I'm just going to go over a basic strategy, and whatever the numbers are, it really doesn't matter. The strategy is always the same. So let's look at 3 or 4 Canadian pairs. So I'll just go over what I normally do when a news event comes out. We're looking at a 5-minute chart. So the first thing I do is wait for that first 5-minute candle to print, and normally that gives me an idea, it gives me a clue what the overall direction of the trend will be. So here's that first initial spike right there, that 5-minute candle, and then what I do after that is I take my Fibonacci tool and I draw it from the big opening to the close of that 5-minute candle, and then I wait for a retracement, and I'm looking for the market to come back down to at least that 50 to 61% retracement level, and that would have been our entry right there. Price came down to that 50%, very close to 61% retracement on this pair, and that would have been your trade. And normally news events last anywhere from 1 or 2 hours, so the entry was here, and that was about 27 pip. So far, the market's still in an uptrend, but normally I'd like to capture at least 20 or 30, 50 pips, depending on the currency. So on this pair, Canadian yen, the market's has been going up for the past 2 hours, but it's about 12:30 p.m. Eastern. The markets tend to slow down, not a lot of volume around this time. Let's look at another pair. My favorite pair, pound Canadian dollar. Same thing. There's the initial reaction, the opposite direction. So I take that Fibonacci tool, I draw it from the swing high to the swing low, that initial 5-minute reaction, and then my entry would be around that 50 to 61% retracement level. Never got any higher than 50%. Another clue is when you see colors go from green to red, then that's your indication that the market is finished retracing. But that will give you a late entry. And again, stay in the trade for at least 2 hours. So if you took your trade at that 50% retracement level, and that 77 pips so far in this trade. Okay, again, wait for that initial 5-minute candle to close. There's the reaction, there's the retracement, there's the trade. You don't want to take a trade when I'm at the bottom of that 5-minute candle. Wait for the market to retrace, and it just requires a little bit of patience. And that was about 15 minutes that the market retraced. 5-minute candle, initial reaction, the retracement, enter a trade around a Fibonacci level. And market went all the way up to 50%. That would have been your entry. Even if you took your trade at 50% and let's say it managed to get up all the way to 60% retracement level, your stop loss is always, and let me just draw this so you'll see it clearly, always above the swing high of the initial reaction. So that's 179.85, and that would have been approximately about 40 pip stop loss on this trade. Initial reaction, retracement, take your trade, put your stop loss 10 pips above the swing high, and stay in that trade for a minimum of 2 hours. And on this pair you would have made about 75, 77 pips. Let's look at another pair. Canadian Swiss. And again, there is the initial reaction. Take your Fibonacci tool and draw it from the swing low to the swing high of the 5-minute candle. Wait for the market to retrace down to, and on this pair, notice price came down almost exactly to 50% retracement. That's the entry. Stay in for a minimum of 2 hours. And so far, Canadian Swiss put in 29 pips. And the last one is the USD Canadian dollar. USD Canadian dollar, there's the initial reaction. I take my Fibonacci tool. I'm sorry, I forgot to switch this over to 5-minute chart. And bear with me just a second. Okay, we're back on the 5-minute chart. Here's the initial reaction to the news event. Take my Fibonacci tool, swing high to swing low, price came up. On all these pairs, they went up to the 50% retracement level. There's my entry right there. And stay in this trade for a minimum of 2 hours. And it's only put a maximum of 20 pips so far. And it's right now just one second. I seem to have lost my place. And there it is. Okay. And so far from the entry, which is up here, I'm sorry, this is 32 pips. I'm sorry, I must have used a different area. So there's the initial reaction. Let me just get rid of this Fibonacci. Okay, so there's the initial reaction. Swing high to swing low, that 5-minute candle. Price came up to 50% retracement level. It's very important that you do take a trade at around these levels. So even if the market, even if you don't see the market retrace at the moment that it hits a Fibonacci level, then you just have to wait till the market reacts to these levels. Just take a trade up at a fib level. 50 to 61% is ideal. You just have to make sure your stop loss is 10 pips above the swing high. There's a trade, and the market so far has gone down about, it's put in about 33 pips. And it's about 2 hours. So that's it. If you have any questions, just email me. If you need any more clarifications, this is how to trade a news event. That first 5-minute candle will give you a clue as to the overall direction. And market went down, spiked down 50 pips, and you don't want to take a trade. You may get excited and you think, oh, the market's going to keep going down. It's not. It's going to retrace before it goes back down again. But that initial spike, either whether it's up or down, should give you the clue of the overall direction for the next 2 hours on a news event. Thanks for watching this video. Catch everyone next time.